Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for September 9th, 2024. Let's get started. SEAF signals for this week. We got financials, consumer staples, and utilities exiting out of both healthcare and real estate. Broadly seeing some strength. You know, we talked about seeing a little bit of lighter flows outside of financials over the last couple of weeks, and we finally got our conviction. Financials on the trading week coming in at 0.27%, which for a third ranked on the trading week is relatively strong. Consumer staples at 1 coming in at 0.4%, which if you've been listening to me in the past is our average. Over the course of back-tested history of SEAF, on any given trading week, 0.4% is actually the average. So a nice strong consumer staples at 1 and utilities at 0.29% increase over the week for a trading week of 2. So really showing some strength here up at the top, showing some conviction after we saw a little bit of lighter flows. Financials a little bit off the gas, but again, really strong for a level for a 3, and an overall ranking of 5 is quite strong. Technology continues its slide. Actually the largest net flow, whether positive or negative, for the week at a minus 0.62%, and energy not too terribly far behind at 10 with a negative 0.48%. Really kind of seeing some of these things converge, really showing some strength up top. We're seeing a little bit of bounce between, the utilities, the real estate, healthcare, and consumer staples of the world, but broadly we're kind of skewing toward some more of our defensive sector spiders. Let's now look into our heat map. We're seeing what I normally like to see. Definitely clumping in the green here up top, showing some strength up at the top. Broadly, kind of looking at the overall flows last week, we were negative all week. So on October, fun fact, on August 30th, we peaked at 299.9 billion. If you add up all the sector spiders, AUMs together, we almost touched that 300 billion mark, which would have been the high since we've been tracking the sector spider data. So close to 300 billion, didn't quite make it there, and then had four consecutive days last week of net outflows. I think the total outflow for last week was 4.48%, as money was broadly leaving the sector spiders. But obviously we have some strength in the individual sectors, and whatnot. So let's, the other things kind of to mention here, again, real estate relatively strong, just outside of SEAF signal. If we look over here, we got a score of 9 or a score of 11 for real estate, which is pretty strong, and in some cases would have gotten you a SEAF signal. But in this case, we have, because we're so coalesced here up the top, financials, consumer staples, and utilities take the top spots for this week. Heading into our rainbow charts. Looking at financials remain strong. Anytime we kind of set up here at the upper favored, when you have, as we did last week, all 3 with a ranking of 1 over the 3 time periods, only place you can kind of go from there is down. So these things can waver a little bit when they stick at the top, but broadly we are seeing some great relative outperformance for financials. The highest it's been in the last year. Utilities. Again, when you start up here at the top, like we did with utilities a couple of weeks ago, it looks like we had a little bit of sell-off for our managers who were trying to take some profits. We are starting to kind of head right back up there for our favored ranking, and we are seeing that corresponding move in relative outperformance. Broadly trying to break out on this resistance level that we kind of touched here in late July, early August, retesting that resistance. So, looking at utilities, upper in the favored, rebounding on the relative outperformance. Seeing kind of a similar pattern here in the relative performance versus SPY for consumer staples. As we kind of shoot up here, as we could see, consumer staples is a little bit slower. So as we move, we kind of we don't have these big jumps like we do in some of the other sectors. Technology being the kind of the key one that we look at, but as consumer staples here is building up some momentum, and like I said, strongest on the trading week, and then 2 on the tactical month, and ranked 3rd in the strategic quarter, really kind of showing that positive momentum that we like to see. We are starting to break out here versus the relative performance versus SPY, coming through and kind of breaking these tops that we saw in April of 24 and late July of 24, kind of breaking out, but having this nice, after a long underperformance trend, starting to break out of that trend and trend in the positive direction, and have a nice sense mid-July, having a nice relative outperformance versus SPY. Technology. I want to bring up technology and energy at the same time. Both have kind of similar patterns. As you can see here, I was mentioning earlier, technology moves a little bit faster. Is our lead horse in most markets, whether it's leading down or leading up. Technology is very much money flows in strong, money flows out strong. And right now we're seeing that real strong outflow. We did peak back up here in late August, but have then declined straight back down. Flows are extremely strong coming out of technology, specifically on the trading week and the strategic quarter. This tactical month was that brief interlude that we had, touched favored and came right back down. Technology is testing its relative performance support of 8.7 to 24, just right here. Otherwise, we got to look back to the end of 2023 since the last time we saw this relative outperformance. Here on energy, kind of similar bout, a little bit slower moving than you see technology, but in that deep void, continuing this broader underperformance trend that we have seen. XLE has not touched, is testing a relative performance support line of 127 of 2022 was the last time that a relative performance was this low. Actually not on our chart here, as we only go back a year, but wanted to say out that, kind of point out that this relative performance is testing something that's been that hasn't happened for quite a while. So we are on this broad downtrend for energy in the relative performance sector. We are in deep void. Last but not least, on our rainbow charts, just wanted to point out that real estate is still doing well. We are in favored ranking. We are just not in a SEAF signal. We are having some nice relative outperformance versus SPY. So for those managers that are, like real estate or looking to get into real estate is still looking relatively strong. It is not producing the same levels as our top 3, as they are getting the most of the action in terms of flows. The drop off, real estate was 4 on the trading week, and it was at a 0.09% compared to what was 3rd on the trading, which was financials, which was 0.27%. So not seeing the drastic inflows that we're seeing in the top 3 sectors for SEAF, but still seeing some relative outperformance, still looking relatively strong. Again, still sitting in favored, just not quite favored enough to make it to be a SEAF signal. That is all I have this week. I look forward to breaking the SEAF model down with you next week, and thank you.